All right. Good morning, good afternoon, and good evening to one and all from whichever side of the world you are participating. A warm welcome to all of you once again on behalf of GTCFX. This is your host Harsh, and also a warm welcome to all our friends and participants who are joining us live on YouTube. Uh, Please stay tuned. We are just starting the session now, and we'll go for about 45 to 60 minutes. And if you do have any questions from YouTube, kindly type in there, and I will be toggling around the screens in the middle, so I'll do my best to reply there. And we've joined by our friends Taha and Shuklaji also. Welcome back again, and let's get started off. Just to give you an overview, in the past 7 sessions, we have covered the basic elements of technical analysis, right from the candlesticks through the sideways consolidation, and this is starting today. We will be uh, sorry, I didn't mute myself in the YouTube, so I was listening. I was able to hear my own voice. So from today, that is 3 sessions starting today, will be based on, we will have our focus on a different or a new analysis which we've been following, or personally I've been following since 2016, and it is the basic structure of we are starting with the basic structure of Elliott wave principle. We'll be following it up with motive waves and corrective waves. Uh, Not everything is possible to be covered, but we'll be doing a lot of practicals on that. So stay tuned on the live sessions as well. And eventually, if you are wanting it, I'll be very glad to extend the, another 10 series, and we can focus on 100% practical implementation of all technical analysis that we have gone through. So you can send in your feedbacks through email, and I would be glad to extend the sessions as well. All right, but right now we already have three sessions to go, and let's get started off with the basic elements of wave principle. We'll be reading out the risk disclaimer. Over the counter margin derivative contracts, including contracts for difference and spot foreign exchange or complex instruments, come with a high risk of losing money rapidly due to the kind of leverage they offer. I mean, tell you what, higher leverage doesn't really imply higher profits, okay? You should consider whether you understand how these products work and whether you can afford to take that kind of risk, which can end up losing money in your account. Independent professional advice is highly recommended before investing or trading. And this webinar serves an educational purpose only and will not include any financial recommendation or trading advice whatsoever. Thank you. All right. For a change, today is a theory session. So tomorrow is live analysis in Hindi. So you can tune in tomorrow for all the action. We've got quite a few charts now playing around. We'll analyze them all tomorrow. Let's get started off with the theory today. All right. Now that's the basic structure of Elliott wave principle, which we are going to discuss. And these are the brief topics. Now, uh, it's actually a very simple theory, but made very complex to understand. Or let me put it that way: it's a very complex theory which we will try and put it in a simple format. We'll start with the history and then go with the basic pattern, wave rules. Uh, now, now, those who are joining in for the first time, I don't see anyone joining for the first time. Isaac, welcome back, brother. But if you're joining in for the first time, we are doing Tuesday, Wednesday, Thursday, and Friday, two theory and two live sessions. If you need any assistance for the past videos, kindly send a message, and I will send a link, also the registration links if you want to join on Zoom. All right, so we start from theory, a basic history, basic pattern, a few rules which need to be followed. We'll understand what is the fractal nature of markets. And now this is the most interesting part of today's session. If we can understand the fractal nature of markets, we really understand the game, how it is played, and how the waves are working, and when they are wanting to take a break, when they are wanting to turn, everything. It really becomes fun after that. And finally, we'll discuss a trading strategy. Actually, there are four of them, but in this session, we'll tell one of them, one of the theories, and finally, we'll be doing some charting, or no, not the charting, but I'll show it on the charts. That's what we do every session, right? All right, so let's get started off with the basic or the history. As always, these are your sessions, brothers. So please feel free to stop me wherever you feel like, and we will discuss. Now, every single time I present this, God's grace, this first slide, I really spend about 5, 10. We can go on for half an hour, 1 hour, discussing these four words actually. It's a complete theory in itself. Financial markets are patterned. It is so, these words are so powerful. If you understand them correctly, uh, you will understand exactly how the markets move, because it's not a random nature of the markets. Markets do not move randomly. 99% of traders believe that markets move in a random fashion. Exactly the opposite is true. They are they move in a very specific pattern. They move in very specific geographic patterns which are identifiable and limited. To be precise, there are 13 patterns. If we know all these 13 patterns, their shapes, and where they occur, it's only about finding them at the right place and right time, and we are there with the trade. So, first, markets are patterned, they move in specific patterns, and the second important thing is that those patterns are repeated over and over and over again. I repeat, sir, those patterns are repeated over and over and over again. As we all say, history repeats itself. Even in analysis, patterns repeat themselves. So, if you can just remember these 2 points, markets move in specific patterns, or let's say markets move in specific identifiable patterns which repeat themselves. It's going to give you a lot of confidence, but first we'll have to have faith. All right, it's just like a Google map. When you don't know nothing about where you're going, and you have complete faith and trust on the Google Maps that it is going to take you the right direction, the right way. It's as simple as that. All right, so sit tight and enjoy this journey of 45 minutes. And if you do have any questions in between, please let me know. We'll discuss. All right. For those who are joining from YouTube, again, a warm welcome. If you do have any questions, kindly type in there. And I do have a habit of toggling. We'll take it over there. All right. Now, what we are doing right now, or in the past several years, is because of the invention of this gentleman, R. and Elliott. What he studied was the Dow Jones for several years as he was bedridden. Uh, and what he said was markets actually move and trend and reverse in recognizable patterns, then they are called waves. All right, markets move in recognizable patterns called waves, and the best part is they are building blocks. So these waves, all right, these waves are the building blocks of the larger version of similar patterns, and then they become the building blocks of the or patterns for one larger wave, and they become a similar or one block of they become one block of a larger wave. You understand? Smaller waves are busy working to build one part of the larger wave. Smaller waves are busy working to build one part of the larger wave. One brick by brick by brick builds a wall. Number of walls would build a building. All right, something like that. And this phenomenon he coined as a wave principle. All right. So this mass psychology, see the markets markets actually move with the mass psychology of billions of traders, right? Now we cannot track those billions of traders' mind, what's going on in their minds. But if we can track these patterns, it's as good as tracking the mass psychology behavior of traders worldwide. Now let's understand it's a very simple pattern, absolutely simple. Let's understand the first basic pattern. If the market wants to rally, or if the market wants to head on the north side, if it wants to trend higher, the first thing it's going to produce is a five-wave movement on the north side. Something like this. Wave 1, wave 2, wave 3, wave 4, and wave 5. And these waves are labeled as 1, 2, 3, 4, and 5. Only one thing to remember, brothers, when the market wants to take an uptrend, it will move or produce five-wave rally, and that rally is labeled as 1, 2, 3, 4, and 5. Those who are just joining, welcome again. We have just started off, so you haven't missed anything. I see Mr. Jing has come in for the first time. Welcome, Mr. Jing, and I will be sending out all the YouTube links and videos and registration links later on when the session is just about to complete. So welcome back. Welcome for the first time, Mr. Jing, and hope you'll enjoy the session. All right, so five waves up labeled as 1, 2, 3, 4, 5. This is what the market will do if it wants to move in an uptrend. Here's a chart which I've shown in a five-wave movement. You see that wave 1, wave 2, wave 3, wave 4, and wave 5. This is a Euro USD daily chart, a at least a couple of years old chart actually. You can see the date here, 31st October 2024. All right. Now I've kept this chart because we want to see five waves up and followed by three waves down. So once the five-wave up movement is complete, the market would produce a three-wave down, which is labeled as A, B, and C. Only two things to remember, brothers. Five-wave up, always remember five waves, always remember to label as 1, 2, 3, 4, and 5. And three-wave structure, which is opposite or corrective, always remember to label as A, B, and C. All right, as I've shown in the chart here. It's a five-wave movement upside followed by three waves. A, B, and C was not complete. This is an old chart, November 2024. You can see the real chart version here. 5 waves up, labeled as 1, 2, 3, 4, and 5. We can get rid of this Fibonacci ratio. So 5 waves up, followed by 3 waves down, A, B, and C. On the presentation, my chart is here. That was November 2024, and what has happened is all for us to see. Now that time, it was predicted that euro is going to drop. It dropped from almost 1,000, 1.9 to almost 1.1, 1.01. All right, so 5 up is always followed by 3 down. Now, the second thing to remember phrase-wise is when the market moves 5 waves, it is called a motive phase, and it is always towards one larger degree trend. I repeat, sir, when the market moves 5 waves, it is called motive phase, and it is moving towards the trend of higher degree. When the market is moving 3 waves down, it is a corrective phase, and it is called as a counter trend. For example, gold what it's doing right now is an ABC. It's in a counter trend, corrective phase. What Euro USD is doing right now is 5 up and also completed 3 waves down. It's beginning to cut loose on the north side again, 5 waves up. All right. Okay, let's start with the other side now. I hope we are all together until now. If you do have any questions, please feel free. These are your sessions. I am just a facilitator, as I keep saying always. All right. Also, those of our friends joining from YouTube, please feel free to type in. I'm always toggling at least 5 to 10 times. More than that, we'll reply over there as well. Once again, if the market wants to move 5 in a downtrend, it will take 5 waves down. It will print 5 waves down, labeled as 1, 2, 3, 4, and 5. And then it will print 3 waves up, labeled as A, B, C. All right. Here's the wave structure. This is a dollar index chart, 5 waves down, labeled as 1, 2, 3, 4, and 5, followed by 3 waves up, A, B, and C. And that is the original wave. I'm going to show you on the chart right away. So you can see 5 wave down, 1, 2, 3, 4, and 5. Always followed by a 3 wave corrective rally, A, B, and C. It's not always, but it's mostly followed by a 3 wave corrective rally, labeled as an ABC. All right. Okay. Let's go back to the theory now. Again, five waves is motive phase, 3 waves is a corrective phase. Please remember, 5 means motive. It is labeled as 1, 2, 3, 4, 5, whether up or down. 3 waves means corrective. It is labeled as A, B, C. All right. Now let's look at some of the rules here. Within the 5 waves motive, okay, within the 5 wave structure on the motive side, waves 1, 3, and 5, they are motive themselves, and waves 2 and 4 are corrective. What it means is If I show the uptrend, wave 1, wave 3, and wave 5, they will they will have 5 waves within. If you look at wave 1 in a microscope, you will see 5 waves: 1, 2, 3, 4, and 5. Wave 3 again 5 waves: 1, 2, 3, 4, and 5. Wave 5 again 5 waves. Okay, and wave 2 and 4 will be constructing or will be constructed of 3 waves. Got it? All right. Next rule, please. Wave 3 can never be the shortest of 1, 3, and 5. Please remember, sir, wave 3 can never ever be the shortest of waves 1, 3, and 5. In fact, wave 3 will always be the largest of 1, 3, and 5. It will be the largest, it will be the fastest of 1, 3, and 5. All right. Rule number 3, wave 2 can never retrace more than 100% of wave 1. That's a very simple rule. And wave 3 always terminates above wave 1. That's also very simple. Now, wave 4 never enters the territory of wave 1. This is a rule which is applicable for impulse waves. Impulse is one of the motive structures which we will discuss in the next session. If you remember these 3 rules, we are good to go. 1, 3, and 5 are motive, 2 and 4 are corrective. Wave 3 can never be the shortest of 1, 3, and 5. Wave 2 can never retrace more than 100% of wave 1, and wave 4 never enters the territory of wave 1. If we are okay with this, I'll move on to the next slide now. Let's do some exercise. What could we say about these counts, please? Please do not hurry. We've got time, and time doesn't really matter for me. We can go on, extend the class till the time you want. But what can we call about these waves, please? Is this labeling done proper, or do you think there is some error? But specifically, this is
Three
applicable to those who are coming for the first time.
wave three is short and it's not meant to be.
Arnold, I could not hear you properly. You said it is. It is.
Wave three is short and it is not meant to be.
Yeah. So the count is incorrect, as our friend Arnold said. Wave 3, Arnold, you said is the shortest, which cannot be the shortest one, correct? So that is being correctly identified. Wave 3. So wave 3 here is the shortest. It cannot be the shortest. Any other fault you can identify, brothers? Can you see this wave 4? I've made this wave 4 go within the territory of wave 1. That is also not allowed. First of all, this is not allowed. If this is not allowed, that is also not obviously not allowed. So there are 2 errors here. Wave 4 enters the territory of wave 1, which is not allowed in case of an impulse wave. And wave 3 is the shortest, which is again not allowed. All right. But at the same time, this wave is an actual wave which the market produces time and over again. We cannot go and tell the market that, okay, you are breaking the rules here, sir. Kindly change your move. If the market has done something like this, it is our duty to label it the correct way. We cannot say the markets, you have done some error here, correct? So the labeling is incorrect. The markets are always right. Let's find out how to label this chart now. For that, we need to we need to go through a small story, which is the fractal nature of the markets. All right, what could be the current count here? Let's find out. Let's go through the story. Fractal nature of the markets. We'll spend about 3-4 minutes here. Please remember, smaller waves are always busy forming the larger degree waves. All right. Now, this chart has got 4 different views, and it depends upon how you look at it. It has got 4 different views. At least 3 different views immediately you can identify. Let's look at them one after the other, one by one. Do you all agree that there are 2 waves in this chart? From this point to that point is wave 1 in brackets, and from that point to this point you've got wave 2 into brackets. So one way to look at this chart is there are 2 waves, wave 1 and wave 2. Arnold will go one step further and say, all right, Harsh, I think I'm seeing 8 waves. So Arnold would say there are 5 up, 1, 2, 3, 4, and 5, and 3 down, A, B, and C. So there are total 8 waves on this particular chart. Both are correct. One step further, Shuklaji would say that it's not 5 plus 3 is 8. I'm seeing 21 plus 13 equal to 34. How is it, sir? So he would say, let's put 1 subdivides into 5 waves. So it's 5, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So Shuklaji is seeing 21 waves on the left side and 13 waves on the right hand side. So he is seeing 34 waves total. One more step further, this wave 1 would again be subdivided into 5 waves, correct? So if you start counting 5, 3, 5, 3, 5, 5, 3, 5, 5, 3, 5, 3, 5, 5, 3, 5, and 5, 3, 5, 3, 5, that would come to 89, and 55 equals 144 waves. Did you realize there are 4 different ways to see the same chart on the same screen that we have presented here? One wave is just 2 waves, the other one is 8 waves, the other one is 34 waves, and the last one is 144, and it doesn't end there. You can go deeper. There are actually 9 levels you can go. All right. If we understand this, have we really thought about that 2 waves, A, B, and C, they've got they've really got 144 waves, subwaves within them. You can become a very busy trader if you want to. The only thing you need to shift is dig within the wave deeper, and you will find the subwaves to trade again. All right. So there are actually 144 subwaves, and even more. It depends upon how you see that. That's why this is the fractal nature of the market. Now, why is it called fractal nature of the market? You see, bracket 1 is made up of 5 waves. 1, 2, 3, 4, and 5. Now, 1 is again made up of 5 waves. 1, 2, 3, 4, and 5. 2 is again made up of 3 waves, A, B, and C. Each 1, 3, and 5 subdivides into 5 waves, and each 2 and 4 subdivides into 3 waves. Only the degree changes. When I say degree, the smaller waves is a smaller degree, even smaller wave is an even smaller degree, larger wave is one higher degree. That's it. Only the degrees are changing. Okay, the magnitude can change, the magnitude of price can change, but the shapes will be the same irrespective of the degree. If you are watching On a daily chart, you will see an impulse or a motive wave like this: 1, 2, 3, 4, and 5. If you are watching it on a smaller time frame, you will see again the same shape. I have a habit of showing it immediately so that it goes into your heart. See, Euro USD. If I say that's a motive phase and this is a corrective phase, now we know that. When Hirsch says motive phase, it is 1, 2, 3, 4, and 5. And when he says corrective, it's A, B, and C. It is not Hirsch, actually, it is our friend, late Mr. Elliott, who defined this. Now, if I just flip the chart on an hourly, and if I zoom in, can you see 5 waves here, brothers? 1, 2, 3, 4. The fifth wave is on. The only thing that I've changed is the time frame. From a daily, I just flip the chart to a 15 minutes. If I go on a 5-minute chart or a 15 minutes chart, I can I can see 5 waves here as well. Can you see that 5 waves movement here? This wave 1, wave 2, wave 3, wave 4, and wave 5. It's as simple as that. The only thing you need to flip is the time frame, and you will be ready to trade any shorter time frame or longer time frame that you want to trade. It depends upon your trading style, your trading attitude, whether you want to trade short term or medium term or long term or even long term. All right, I think we've spent enough time to understand the fractal nature, and I also believe that it's very clear now to all of us. Let's move further. So, what is the probable wave count here? The probable wave count is bracket 1, bracket 2, and then the third wave is progressing. So, third wave can be labeled as 1, 2, and the third of third wave. We are not breaking any rules now, are we? So the market is always right. The wrong part was the labeling. We just changed the labeling. Now we understand what the market is doing. Market is progressing within bracket wave 3, and within that bracket wave 3, it has got still 2 more waves to go. I hope it is clear now, sir. If it is, then let's move further. So that's the basic structure again. Motive phase, please remember, motive is 5, corrective is 3. We will see more corrective patterns next Tuesday, again next Tuesday. But principally, you remember this: motive means 5, corrective means 3. Motive has to be labeled as 1, 2, 3, 4, and 5. Corrective will be labeled as A, B, and C. Okay, Karthik has joined. Welcome, Karthik. Motive is always 5, corrective is always 3. Okay, and 5 means you have to label 1, 2, 3, 4, 5. This is a rule. Okay, don't mess around with the rule. Don't label A, B, C, D, E. That's a complete wrong thing. Okay, degrees is fine, but at least the basic structure needs to be labeled as numerics and letters. Okay, motives are always numerics, correctives are always letters, alphabet, sorry. All right, if we apply the rules and guidelines of the wave principle, combining with the support resistance, Fibonacci trends, etc., we can spot high potential trade setup. So how do we do that? It's very simple. So you got to let wave 1 complete and also let wave 2 complete, because wave 1 is the first step that bulls are back into play, but you don't want to buy at a high, so you wait for a corrective decline, that is wave 2. You take your entry at the end or termination of wave 2. All right, your stop loss goes below the beginning of wave 1, and your extension will be Fibonacci 1.618 of wave 1. All right. I in every session I keep on asking if there are any connectivity problems. Kindly let me know that so that it can be checked, please. If you're finding connections dropping, then you can please let me know. Okay, so first strategy is buy the termination of wave 2 in an uptrend. Stop below the beginning of wave 1 and target, which is wave 3, which is Fibonacci 1618 extension of wave 1. All right. So here's how it looks like. Let's say wave 1 is 100 points, wave 2 at a 61.8% Fibonacci retracement of wave 1, the price will be around 40. 62 points less 100 is almost 38, so it's 40. So buy around 40, stop loss below 0, and the target is 100 multiplied by 1.618, which is 162. So it's as simple as that. Correct? The practical implementation on charts, we've already seen a couple of them. We'll do it again. Okay, the first thing that we've already seen is the 5 waves up and 3 wave down. So if you want to do a trading practice on this daily chart, then that is wave 1 of one higher degree. So 5 waves, that will give us bracket 1. This will be bracket 2. Now bracket 2 is ending at a Fibonacci 61.8%. You see there? So on 13th of January, the bracket 2 wave terminated and it gave us a trade signal. Buy at 1.0175, stop loss around 0.95, and the take profits, we take the 161 extension of wave 1. All right, and there you go. Now this is an Elliott wave. So 161 extension is 1.29 actually. 1.29, that is almost 1.3 on the upside. Now this is on the daily chart, so it's going to take several weeks, possibly months, for us to for euro to reach that target. But we can do that same exercise on the hourly chart, and here's the trade. So what we did on the live sessions, one of the live sessions, is we took this wave 1 smaller degree and wave 2 termination, again at 7.86%. So we entered, the entry would have been at 1.02, slightly higher, let's say 1.0331. Stop loss would go around 1. Just below that beginning of wave 1, 1.0, 1.02, and the targets, let's take the target. I'm doing a simple extension. You can see that the first target 520 has just been hit. Maybe the second target at 586 also is just in the reach. It's about 40 points lower than this second target. All right. So these are all examples of wave 2 entry and exit at wave 3. Similarly, it can be done on the south side as well. It doesn't matter whether up or down. You just need to identify the wave structures, that's all. So over here, the first wave of larger degree was identified as minute wave 1, and that is minute wave 2. So If you take an extension of minute wave 1, it is down there. It's already there. I've done it on the 4-hour time frame. This is what we do in the live sessions. All right, brothers. And that's the first target. Remember, dollar index live session first target was 105.60. That is almost meeting. The second target is 104.60. These are the third and fourth targets, 101. Ideally, it's going to go below 99 over a period of time. So that is the first strategy where we enter at a wave 2, and this is the best wave to enter. You know why? Why is it the best way to enter? Wave 2, the termination point of wave 2 is the best place to enter. Why? I'm saying termination of wave 2 is the best place to enter. It is the best place to enter, sir, because remember the third wave will most probably be the largest and the quickest wave of 1, 3, and 5. It will give you maximum profits in the least possible time, and most of the time the third wave will be an extension. We will take what is an extension in the next theory, that is next Tuesday. All right. Next Tuesday, our agenda will be to review the types of motive waves. All right. We now know what is a motive wave. Okay. We will go into the types of motive waves next Tuesday, and we will go into the types of corrective waves the Tuesday thereafter. All right, sir. So that's probably what we were supposed to discuss today, the basic structure of the wave principle, which we have done. Now, for those who are joining with us in the YouTube live, I'm going to announce that we are meeting 4 times a week: Tuesday, Wednesday, Thursday, and Friday. Tuesday and Friday are English sessions, and Wednesday and Thursday are Hindi sessions. If you are wanting to join in the YouTube, please mark up the dates: Tuesday, Wednesday, Thursday, and Friday, same time, 4 p.m. Dubai time and 5:30 India time. And you also have the YouTube list for past videos. And for those who are wanting to register on Zoom, I think everyone here is already registered, but just in case you haven't, these are the links to register on the Zoom. All right. So please feel free. Tomorrow is live analysis session in Hindi. Thursday is theory in Hindi, and Friday is live analysis in English. Live analysis sessions are only they've got no language barrier. All are welcome, and all will gain actually. All right, then I think today's session is done. If you have any questions or doubts, or you have any suggestions, please feel free to write to me at harsh.jappi@gtcfx.com. We still have 2 more theories to go. After that, if you want, we can convert these into another 10 educational series or live session series. So I leave it up to you. Please send in your valuable feedbacks to harsh.jappi@gtcfx.com as to what you wish, whether more theory and practice or convert these into live sessions. And we'll do it accordingly. And if you do have any questions now from YouTube or in the Zoom sessions, please let me know so that it can be addressed. Gauhar
Sir,
Khan,
the
okay.
the chart just showed now. Euro USD. Hello, sir.
Sorry,
Yes.
Arnold, I'm not able to hear you clearly.
So can you hear me now? Can you hear me now?
Yes, Isaac, yes, please go ahead.
Hello. Hello?
Isaac, please go ahead, brother.
Yes, can you hear me now?
Yes, I can hear you,
Hello?
Isaac.
Yes. I said this fib level 0.5 at price 1.04. You can see that place, right?
Can you please repeat your
That's
question?
yeah, the fib level, Fibonacci level 0.5 of price 1.04.
Okay.
Yeah, if before the chart fully forms and we can identify the wave 1, 2, 3, 4, 5, can't one think that price level is where wave three the wave three will stop?
I'm not able to hear you properly, but I think you're asking about the labeling, correct?
Yeah, I'm asking about the labeling, but I'm like before this chart fully forms.
Should I go to an hourly chart? Or should I be on the daily chart?
No, this particular chart
Yeah, this particular chart. Okay, fine. Go ahead.
before it fully forms.
Ah,
For
okay, okay. I got your point. I got your point. I understand your question.
okay.
I understand your question. Let me answer your question now. Gohar Khan, please stay online. We are doing gold analysis. Let me answer this question from my friend Isaac. Okay, Isaac, when you say at point five over here, we can think of 1, 2, 3, correct? And we could have bought here and we could have stopped out. This is your question, correct? Let me address this question, my friend. Normally, wave C unfolds into five waves. I repeat, wave C, that is this wave C, unfolds into five waves. So when I count my waves, it is 1, 2, 3, and there is wave 4 and 5 left. So I cannot mistake this ideally by taking wave 3 and going and buying that. All right. And even if I do that, the next structure is three waves. It is not five waves. Can you see here? The next structure is three waves. It is not five waves. So that is again corrective. Market is giving me a chance to flip my trade and turn into short position. Okay. Yes, Jitendra Mistry, each session is of 60 minutes, at least 60 minutes. Actually, it is 45 minutes, but it normally go up to 60 minutes. Isaac, did I answer your question, brother?
Oh yes. Thank you.
Okay, okay, thank you so much. Now, Gohar Khan, let's do the analysis for gold. This is the gold chart. I have already labeled this. This is what we do in the live sessions. Now, gold is primarily in within a five-wave rally. Isaac, you had a good question though. It was a good one actually. But wave C are consisting of five waves, so we have to wait until five waves drop. Okay. Now, gold is in the five-wave rally, and that rally is going to end somewhere in the 3,200 mark. But within that five wave, gold has completed wave 4, and the fifth wave is going on, possibly. All right. Now, within the fifth wave, remember wave 1, 3, and 5 subdivide into five waves, correct? So, wave 5 needs to subdivide into five waves. So, we've got wave 1, wave 2, wave 3, and probably wave 4 is under question, and then we will go to wave 5. So now, if you try and find out what is wave 4 or where should wave 4 end, it is something here. So wave 4, I'm going to change the structure a bit. Wave 4 is ideally going to end somewhere around the 2820 zone. Did you see that last Friday it has already hit 2830? Whether it is completed or not, it's a big question, but most probably it has completed wave A here. It is right now within wave B rally, and one more leg lower is left. Now that that wave should ideally take us to 2820 or 2817, which should complete wave 4. So this is wave 4 and wave C. So wait for one more corrective wave, and this is a corrective wave, it is not a downtrend. So if you are not inclined to sell against the rally, then you have to wait for a drop. But if you are an aggressive trader, you might want to short with a stop loss of 29, potential stop loss of 29.60 or so. Don't keep it more higher. Keep it tight, and with a potential target of 28.10 on the downside. All right, so that's the story for gold, Gohar. I hope if I've addressed it, you may acknowledge it. Do you have any other questions, my friends, from Zoom and those who are joining with on YouTube, please? Okay, I think there are no questions. So I think are we good? Are we good, Arnel, Isaac, Mr. Taha, and Shuklaji? Shuklaji, thank you again for tuning in. You have already done these things, but it would be a good revision. But if you still have any questions, please feel free to ask, sir. And if you're all good, I might want to bring this session to a pause. Yeah, thank you so much. So please don't forget coming Friday is live analysis in English. Kindly tune in because this is how we use our analysis. And if you do have any questions or suggestions, please write to me at harsh.jappi@gtcfx.com, and we'll be more than happy to address it. All right. Thank you, Mr. Taha. Thank you, Isaac. Thank you, Brother Arnold. And tomorrow is live analysis session in English. Sorry, Hindi. Live analysis always on charts. So I welcome you all to join at 4 p.m. Dubai time. Those who have joined us on Zoom and for those who have joined us on YouTube, most welcome. Thank you, Sunny. Thank you, Jitendra Mistry. Thank you, Gauhar. Thank you, MRSM. Thank you, everyone on YouTube. It's a great pleasure to see you all online there. See you tomorrow at 4 p.m. Dubai time, everyone on Zoom and YouTube. Uh, let's call it a day here. Thank you, Mr. Taha. If you have any questions, please feel free to write to me, sir. No problems at all.